my sense is that understanding money and all its assets, from personal finance, investing and trading, none of it's rocket science, but no one's teaching us. We're not learning it at our schools. We're not learning it at our places of work. In truth, governments around the world aren't teaching us because they don't do good personal finance. They spend more than they have. So I thought, let me get a website. What it does is it gets the information out there. You could be living anywhere on the planet. As long as you've got internet access, you can now get available to. So really it is from absolute beginner all the way through to advanced, create quality content which just talks around money, how to manage it, and most importantly, how to grow it, how to get rich. That's what we want.
I have quite looked at the website extensively, and where you finally separate the difference between investing and trading.
Yeah.
What would be your idiot's advice be, as to the
simplest? And I use from the South African Revenue Service. They're saying if you buy and sell within a 3-year period, you're a trader. And then you pay it at a higher tax rate because you pay marginal. If you buy and hold for 3 years or longer, they say you're investor. So I use that as my definition. To me, anything less than 3 years is ultimately short term. I mentioned a moment ago we want to be rich. The truth is it's easy. The bigger picture is it takes time.
There is an angle that you introduced about people's being able to settle their mortgage bonds within a period of seven years. You right? Can you take us through that?
So a couple of fairly simple tricks we do. The first one is typically your mortgage goes off on the 1st of the month. Move it forward to payday. If you're paid on the 25th, make that debit order go on the 25th. Those 6 days save you some time and money. Pay more than you need to. So if you need to pay 2,000 Rand, pay 2,200. And maybe that means buying a slightly smaller house, but you pay a little bit extra as well. And then the big secret is every year when your salary increase comes through, increase your mortgage payment by that salary increase at the same time. So you're paying a few days earlier, you're paying more than you need to from day one, and then if you maybe you only get a 5% salary increase, but then push your mortgage payment up 5%. Otherwise what happens is as your salary is increasing, your mortgage stays flat and you just spend the difference. And if you do that, you can bring it in at just over 7 years. And the reason we were aiming for 7 years is because that's typically how long a person is in a house before they then move to the next one that they
will one achieve the same results with a constant or increasing pattern of interest rates?
So you're going to be relative to that's taking an assumption of a flat interest rate. If interest rates change, you need to adjust accordingly. Now, if interest rates go up, I always say to people, if you can afford, and I appreciate life is not always that easy. If you can afford to, when interest rates go up, push your payments up as well. And when interest rates go down, leave your payments flat. So in essence, the interest rate only works on the upside if you can afford to pay that extra.
Let's talk about the JSE. I'll bet you a few people have never been in the JSE, and some of them have got money, be it new money, be it old money. Why are people afraid of this area? Why don't we have this curriculum in our schools? Is it necessary to have it in our schools?
I think we should. I absolutely think we should. I think it should be, and I'm not even talking grade 11 and 12. I'm saying it should be in grade 6, 7, 8 type of scenario. I mean, people are scared of it because they're not quite sure what it means, because they've heard stories about people losing money. They've heard stories about people making money, but they seem to be more scared of the losing money side of the equation. And I think because it's not being taught, I was fortunate. I had people in my family who didn't have shares, but they could explain to me what the stock market was. That got me interested. And the question is, who's doing the teaching? And that's a big part of what my website's doing, is it's saying, well, we put our hand up, we can certainly do some of it. The JSE does some. They do some school challenge, they do some university challenge. But I'll be honest, they get to a lot of schools, but not nearly enough.
I want us to go back a few years, around the 87, 88, and 89, when the Dow Jones shed quite an extensive amount of money on one particular day, yes. Black Monday. Much of the fear emanates from that. How do you begin to say to people, here is the JSE, you can access it with the little cash that we have to increase it over a period of time?
I think there are 3 things I say to people who have those fears, because you're right. It fell 22% in one day. That's scary. But a couple of points is that in the short term, crazy things will happen. Stocks go up, they'll go down, there will be 22% down days. Not often, fortunately, but they happen every so often. The point is that if you look at the historic data, is that they recover that value typically within about 2 or 2.5 years. So recovery is quite quick, so don't worry about the short term. The other point is, in essence, if the price goes down, what are we seeing? We're seeing a sale. If we go to the local retail store this weekend and their prices are marked down 25%, there are people queuing because there's a sale on. the same at the JSE. When the Johannesburg Securities Exchange is going down, it's becoming cheaper. So in essence, if you can go and be buying some rather than be selling. You don't want to be selling at the worst possible time. And the last point is to understand that this is, as I said, the wealth creation takes time. You've got to give it, when I say time, I'm not saying 5 years, I'm saying decades. Me and you can do all right from it. The real benefits are going to be the youth who are coming through. So, a big crisis in one day, change the channel, watch something less stressful.
I've spoken to one or two people about, for example, the South African Treasury bonds. And can you just simplify them for us? Because I noticed one too many people were not even aware of the bonds that are put on sale by government.
Yeah, the retail savings bonds issued by government. A couple of really great features. Firstly, zero cost. So there's no transaction fees, nothing. You can buy them via the post office. You can get them online. And in essence, what you're doing is you're loaning money to the South African government. Now, is there a risk the South African government won't pay back? In truth, of course there is. But how big is that risk? I would say it is infinitely small. We would frankly have bigger problems if our government is not paying back the citizens it owes money to. And then you get interest rates that are linked either to inflation rates or linked just set to the current interest rates in the environment. So you get a decentish, it's not a massive rate of return. I typically say they're for people who are in retirement, who are looking to get some income from whatever capital they have, because it's nice and secure, because they haven't, we spoke a moment ago about the market correcting 22%. If that happens and you're in your 20s, 30s, even 40s or 50s, you've got time. If it happens and you're in your 80s, that might be a problem.
But can you access that money within a certain period of time, or will you have stumbling blocks?
So there is there's a lock-in period, typically 1, 3, or 5 years. What you can do is reset the rate, and you can on the anniversary withdraw it, but you can't get it you couldn't wake up on a Monday and get your money by the afternoon. No.
What sort of penalties would then be affected if you were to demand to have that money
The penalty is typically that you lose the accrued interest. So what they do is they pay the interest every 6 months. If you take it out, you lose some of that interest that is due to you.
But how has society, for example, in case the South African society responded to this retail bonds in particular?
They've responded a bit, not I think as much as I personally would like them to. We've got a new initiative announced by Minister Nene in his budget speech in late February, the tax-free savings accounts as well. And in there you can also put shares and I think there needs to be a lot of education around this, around, what can you do with a couple of R100 every month that perhaps you've got left over? Where can you invest it? And what can you expect from it? And it comes back to the point you made a moment ago. It's very much around helping people understand what the options are, what they can do. And if they don't know about it, they're not going to use it.
You have an extra 1,000 Rand or 2,000 Rand or 3,000 Rand at the end of the month. Can you approach the JSE? Can you join any other group of people who are investing?
You absolutely can. And I'll come to the group of people in a second. You can start from as small as 300 Rand per month. You can do a monthly debit order that will go off. It buys you something called a Satrix 40. That's essentially a basket of shares. So it's the 40 largest companies in the JSE. These are companies we know. It's the big banks. It's the retailers. It's the telco companies. So these are companies that we know. And because it's a basket, it's less risky. If one share's having a bad day, there's 39 others. But I liked your point about the groups, about pooling together some money. So maybe there's 5 of you and you've each got 1,000 Rand. Now you can put money together. Now you've got 5,000 Rand every month. You're also pooling your expertise. So one of you can go and investigate this stock or perhaps look at that one. And in essence, form an investment club and use your money collectively, but also use your knowledge and your learning collectively.
We have seen the emergence of pyramid schemes, and people have to be wary at all times. How do people discern between the two?
If you're going to get rich in a hurry, it's not going to happen. The problem with them is, I think that when people, and I fell to one, and in my defense, I was much younger and sillier, but when I saw it happening, I looked at this and I thought, too good to be true. But it's that lure of easy money. You take the clever part of your brain and you say, shush, let's try and quickly get rich. If it's too good to be true, it simply is.